Good morning, everyone. Tony Martinez here with Latino Tax Pro, and we are live yet again for another great webinar. Back with us, Justin Pograno with Finagraph, the makers of Cash Flow Tool. And today we'll be covering what is cash forecasting and why you should always be looking at your cash flow as a small business. Justin yesterday gave us great insights on how a lot of small businesses, they fail for the lack of proper cash flow forecasting and management. And so we're excited to hear from Justin and everything he has to say. But hey, Justin, how's it going?
Very good. Yeah, ready to get started.
Perfect. So with that said, take it away.
Awesome. Thanks, Tony. Yeah, for those of you guys who joined or listened to the Facebook Live yesterday, we kind of talked very generally about the issue with small businesses and cash flow and the pain points that they have and how you can, as an accounting and tax professional, help them in this area. And so today, as Tony was mentioning, we're going to talk a little bit about what it really means to help your clients regarding cash flow. But more importantly, we're going to go through what we call the winning formula to adding this as a service into your practice. So we're actually going to go through a step-by-step process for you and the rest of the folks at your firm to start offering these services to clients. And so that all starts with a definition of what cash flow advisory really means. And so I'm going to go through this step by step. Or part by part. There's just a few different components of this. The first component of what we call a cash flow advisory service is cash flow forecasting and cash flow management. And so that really means preparing and maintaining rolling cash flow reports and forecasts. Later on in this presentation, you'll hear me say focusing on the past, the present, and the future cash flow position of the company. And that's really going to help your clients make decisions proactively and confidently, right? As Tony's mentioned, a lot of the members in the Latino tax group are trying to move towards more advisory services, trying to do more for their clients, and be that proactive advisor really for their clients. And focusing on cash flow is a really important and easy way that you can do that. The second part of a comprehensive cash flow advisory service is scenario planning. So mapping out upcoming business events and making sure that those are included in cash flow forecast. The company has the funds in order to execute on whatever those events, initiatives, growth plans are. And most importantly, understanding the financial viability of those decisions that need to be made. And what is the impact on cash position at the end of the day? The last piece is metrics and KPIs and tracking and monitoring these things that will enable a proactive response. So when you start tracking specific metrics and KPIs that are important to the business, that will help you respond proactively if things are going the wrong way, right? So you can think of specifically if we were to focus on just metrics around how fast the company is collecting from its customers or how fast it's paying its vendors, right? AR and AP days are those two metrics. And AR days is going up, right? It's taking us longer to collect from customers. We can get ahead of that. We don't need to wait 3, 6, 9 months from now where we're stuck in a bad position from a cash perspective. We can't, for instance, fund the growth of the business as we hoped. So as I mentioned, all these three components is really what creates that comprehensive cash flow advisory service. And then we're going to go through this presentation to help you add that to your offerings. Now, as you guys probably guessed, Cash Flow Tool aligns very well to all these different areas, particularly being able to automatically create cash flow forecasts and have the flexibility to present that information, both the past, the present, and the future. We also have dashboards and coaching in there where you'll be able to track metrics and KPIs over time. So you can go through all this with your clients just by a few clicks of a button. Now, we want to start also by just talking about the overall benefits to you and your firm in helping your clients in this area. So there's going to be three main benefits to doing this for your clients. The first benefit is that a lot of people think when you're adding a new service offering, and particularly when you're trying to take that step from compliance into advisory, that it's going to be really difficult. And the beauty of cash flow forecasting and helping your clients in this area is that it is very easy actually to implement. And here's why. The first is it's going to be a minimal learning curve for you and your staff to get up to speed in order to do what I'm going to teach you how to do today. And that is really because of technology doing all of the heavy lifting in terms of pulling in all of the historical data and running that analysis for you. And you already have knowledge of their business by helping them with taxes or doing their bookkeeping. So you're going to have that background information that you need to have a informed conversation with your client about what's happened from a cash flow perspective and where they're going. So minimal learning curve, because you're going to be able to leverage all the information that you already know about the business, what you've helped them with to date, right? Technology is going to do the heavy lifting in terms of pulling data, analyzing that data so that you can focus on having conversations with your client and helping them. The last reason why it's easy to implement is that clients welcome these insights. So we were talking about some of the general statistics in the area of cash flow, particularly, this was yesterday on the Facebook Live. Average business holds $12,000 of cash on hand and 27 days worth of cash, both of which are alarmingly low numbers. Now, your clients might not necessarily be in that bucket, but I can tell you that if you're not helping them in this area, cash and cash flow is something that's on their mind. And if you start talking to them about helping them manage it and helping them understand it better, they're going to be welcome to that help. The second benefit in here is that it's friendly to the bottom line, or it's profitable. So this can be a standalone billable service offering. We were talking yesterday as well on the Facebook Live just about what this will allow you to do in terms of creating a recurring service offering for your clients. So in addition to those, the year-end tax returns, or maybe you do quarterly tax returns for your clients, in addition to that, you can start helping your clients with cash flow on a recurring basis. And that can be used as a standalone billable service, or you can add it to maybe the bookkeeping that you're doing on a monthly basis as well. It's also relatively low cost to implement something like this because of the technology that you're going to leverage, like cash flow tool, but it has a high impact on your client, right? And that's because cash flow is so important to them. It's also repeatable, right? The best type of services to add to your firm and your capabilities are those that you can repeat over and over and over, right? You don't want to invest a bunch of time and a bunch of money into adding a capability that you're only going to be able to do once for one client, right? You want to put a process in place. You want to be able to use technology and create a process around it that you can repeat for every single one of your clients, or at least the majority of your clients. And helping your clients with cash flow, particularly implementing the services we're going to talk about today, it is definitely repeatable. The last is that it's going to open the door to other or new services. So again, big trend is trying to add new service offerings, becoming more of a value-added advisor to your clients and being proactive. This is a really low-risk way to start engaging in new conversations. If you are currently only talking to them about taxes, now you're going to talk to them about cash flow, right? And talking to them about cash flow is going to start opening up some new topics around what are the growth plans of the business? What are they planning to do over the next 3, 6, 9 months? How is that going to affect cash? And that will also go back to how it's going to affect taxes and some other things in their business, right? So you're going to be having new conversations. You're going to start having more engaging conversations, and that's going to help you pitch additional services or get some other ideas on how you can help your client in different areas. This is going to be a new opportunity for you to demonstrate expertise, right? You've been building up a skill set over time in helping your clients with taxes or helping them with their bookkeeping. Helping them with cash flow is going to be that new opportunity to demonstrate that you are the expert, and then you'll have more opportunities to do so as you're able to offer new services or new help to them. The most important thing here in order to start pitching new services based on the conversations that you're having is to listen and always have in the back of your head, how else can we help? How else can we contribute to what our client is trying to achieve? And you'll get through that as you're having these conversations. So let's get started and talk about the steps for this winning formula to actually execute. Step one is going to be identifying the best fit clients to start. And we'll talk about the strategies that you can use to identify the clients that you want to start with. We'll go through your client list and put them into categories. The second step is how to add the add the cash flow service offering into the offerings that you have right now. We'll give you a couple strategies on how to do that. Step three is going to be to go out and actually sell the new service. So what are some strategies that you can use to pitch it to your clients? Step four is execution. So we'll go through what a cash flow meeting means with a client. We'll talk through some examples, and then we'll also show you a demo of the tool at the end and how you can use cash flow tool to execute on those. The last step is starting fresh with new clients. So most of steps 1 through 4 is going to be talking through getting ready to offer this to your existing clients, but there's going to be a big opportunity for you to start offering this to any new clients that come in the door. So you can think of a new client that might come to you next week or next month. You say, yes, we will absolutely do your tax return. That's our core competency. That's our strength. We love doing that. And we'll do your bookkeeping, and we'll also do cash flow forecasting for you. So you want to make sure that you're including that in all your pitches moving forward. So let's get started with step one, identifying the best fit clients to start. So most of you guys have a client listing in one form or another, whether you track this manually in Excel, like I did on this little screenshot, or you have it in a practice management system. But what you're going to want to do to start is pull down that list. So get that list of clients, have a good understanding of how long they've been a client. What are you currently offering them right now? What's their monthly fee? This is all information that will help you determine the next step in here, which is to put them into one of the 3 categories that we're showing on the right. So the first category is the low-hanging fruit. When you go through your client listing, who are those clients who will jump on this right away, really need the help? We'll talk about some characteristics of those specific clients. The next category is high impact. So who are those that might not be in that first category, those that you approach right away, but providing these services to them would have a high impact on their business. And the last is the lower impact category. And we'll talk about some characteristics that will describe clients who would fit into that category. Let's start quickly with the low-hanging fruit that we have in here. So there's 3 essentially sub-characteristics or characteristics of the clients that would fit into this category. The first one is rather obvious, right? If you have a client who has asked for these type of services, then they fit into this category, right? You're going to want to help your clients who are asking for help with cash flow. That might come in the form of them coming to you and saying, I'm having trouble paying down my term loan, or I'm having trouble, I want to go out and get a new line of credit, right? I need help doing that. I need to get a better handle of the cash that's coming in and the payments that I'm making, or the cash that's going out. They're asking you for help. They might not have asked specifically to receive a cash flow forecast from you, but they've said things specifically around cash and having trouble with it. The second is cash flow struggles. And this kind of fits into a little bit of that same vein, but more so things that you're able to identify. So maybe you've noticed by looking at the numbers that they've been paying a lot of interest, right? Or they've been overdrawing on their bank account, or some of those indicators that say these guys might be having some trouble on managing the cash that's in their business or the cash flow that's going through it. The third are seasonal businesses. So we actually talked at length yesterday, you and I, Tony, about seasonal businesses and how much of a struggle cash flow is for them. They fall into this low-hanging fruit category because of the inherent struggles that seasonal businesses have with cash flow. So if you have some clients who are in a particularly tough seasonal business, then they would fit in this category because they would likely jump on it right away. The next category that we have in here is the high impact. So I'm just gonna bring all these things up here. These are all the characteristics of clients who might fit into this category. So the first are those who are in growth mode, right? Or who have a growth goal, right? If you have clients who are looking to grow their business and they have some a level of revenue, right, or a hiring plan that they want to achieve this year, next year, or just quarter over quarter, these types of clients are going to be in the mindset where they're gonna know, or they should know, that they need to keep a close eye on cash flow to make sure that they can fund that growth, right? Now, they're going to fit into this high impact category. The second are those who are seeking financing. So someone who needs to go out and get a new loan product or open a line of credit. Those guys need to have a very close eye on their cash flow, so that when they have that conversation with the banker, they'll have all the ammo that they need to have a good conversation and get that loan. The third are cash flow red flags. So you might see things when you're looking at the metrics or KPIs of a business that indicate that they could benefit from these services. So that could be things like we were talking about before. If you were looking at AR days and that starts going up, taking longer to collect from clients, that could be a cash flow red flag that you want to take note of and say they might benefit from us helping them with their cash flow. The fourth is personal life circumstances. So this really applies to sole proprietors. And if you're close enough to the owner that you know that they are trying to either put a mortgage down on a house or buy a new truck or something along those lines, and they are typically pulling cash out of the company in order to do those sorts of things, then you can help them plan out for those purchases by making sure that they can take the money out or pay themselves through payroll or an owner draw enough to fund those particular circumstances. The last two are around future sale of the company. So if they're looking to sell in the future, having a good handle on cash flow is super important, because those are the type of questions that buyers are going to have, similar to bankers, around the historical performance of the company and what the future cash flow is. And then high variability. This kind of goes hand in hand with seasonality, except it could be a little bit choppier, right? A lot of you guys probably have clients who have a lot of ups and downs in terms of cash flow, particularly on the inflow side. They would fit into this high impact category because you can help them put that into a forecast and plan out the payments that need to be made, make sure that they can fund those over time. And as we were saying yesterday, Tony, any plan is better than no plan, especially for folks who have the high variability.
Yeah.
The last category that we have here is the lower impact. So these guys, or these clients, they have circumstances that indicate they likely won't benefit from cash flow services right away, but they could at some point in the future. So if you have a client who has an in-house CFO, likely they're already all over this, right? And they are looking at the cash flow of the business, or they should be. So hopefully they have that already buttoned up. The second and third are really a cash cow business, or they're smooth sailing and they're printing money and they do not have any problems at all. They're probably not the ones that you want to address initially. That said, obviously managing cash flow appropriately and having a good handle on it is critical for any business, but the ones that you want to start with are going to be those who are in the low-hanging fruit category and the higher impact category. So if you think about these three, right, and if you've done this, once you've gone through this process, you have your client listing, you've categorized your clients into these three categories, and you want to start with low-hanging fruit and the high impact. This is where we're going to focus on to build out the cash flow service offering that we're going to provide. And that's the first step. We've identified the best fit clients to start, which really fit these two categories. Next in here, we're going to talk about how to add this into our current offerings. So it's pretty common for folks to have a packaged service offering model where they have a good, better, best model in terms of the services that you're providing. Good would be essentially the bare minimum that the company needs in order to get through the year, right? They need to file their taxes at the end of the year. They do need bookkeeping, whether you're providing that to them or not, right? The better category typically is a little bit more advice. You might be providing a little bit more from a tax strategy standpoint. You might be providing them quarterly tax returns in addition to just doing the work at the end of the year. And then that best model is where you're really providing some more strategic advice to them. So this is a pretty common model that folks do in the accounting industry. And the way that you can include cash flow services into your current offerings is simply to bake it into all levels, right? We talked about if you're doing bookkeeping for clients right now, that's already a monthly recurring service offering that you're providing. It'll be really easy for you to tack on and include in that first offering there, or that good model, the lowest package, so to speak, cash flow services as well, and then just include that in all the services moving on. I also mentioned that this could be its own standalone service. And so if you want it to use it just as an add-on, particularly for the clients that you have right now, you'll be able to go to them and pitch this as an offering, and we're going to go through the way to actually sell it and pitch it next as well. What we have up here on the screen is actually a description of what the service offering actually includes. So we talked about the different components of a comprehensive cash flow services offering. This actually goes through point by point of what that actually means. You feel free to steal this. You can put it on your website. You can do whatever you'd like with it, put it in proposals. We want you to have everything that you need to feel ready to do this. And giving you this language is just one way to do that. So I'm going to go through these point by point really quickly. First is to track your company's cash. This is what we're telling the client, right? This is what we're going to do for you. Track your company's cash flow so you always know where cash comes from, inflows, and how it's being spent, or the outflows. Second is keeping current a rolling 6-month cash flow forecast. You can see the cash impact of any of the decisions that you need to make. The third is to track and provide reports to you on relevant KPIs and metrics that are critical to the cash flow of the business. And the last is to review this with you on an ongoing scheduled basis. So these are 4 items. Again, you can use these in proposals, you can use it on your website, you can talk to your clients about what it is that you're actually providing them. So these are a couple strategies on how you can add it into the offerings that you have right now. Now let's talk about how to sell the new service. And this is going to start with reaching out to all of your clients, or the ones who are in that low-hanging fruit and high impact category. So this is just an example of an email you can send out to your clients in order to let them know that you are adding this new capability to your offerings and that you can help them in this area. So let your clients know, send out an email, give them a phone call, tell them that you want to talk to them about the new things that you can do for them. Now we're going to talk about the actual process of selling them, right? So you've scheduled the meeting, you're talking to your client now, and we're going to go through the pitch. And this includes 4 parts. We're going to talk about what we can do. We're going to talk about how we will do it, what it means for you or what it means for the client, and how much it's going to cost. So as we're selling the service, we're going to talk about what we can do. And this is going to be those 4 points that we saw on the screen before, right? Talk through these point by point with your client. And this is meant to be really in simple layman's terms if your client will understand. So again, feel free to pull that language and use it in your conversations. How we will do it. So they're going to ask, what does this actually look like, right? We've talked about what we can do and what the benefits are there, but how will we do it? And so we're going to walk through here a really easy and quick timeline of events that you can describe to your client to tell them how you're actually going to perform the service and what it will look like. So the first step is an initial assessment. And what you're going to do in that meeting is discuss the historical cash flow of the company, talk to them about what their challenges are, particularly in the area of cash flow, and determine the company's needs moving forward. So you can tell them, this is how we're going to start the cash flow services that we're going to provide you. There's going to be this initial assessment period, or initial assessment meeting, I should say. The next is going to be our opening cash flow meeting. And this meeting, we're going to set up a forecast, and we're going to also determine the cadence of go-forward meetings. So it's pretty common for the accounting professionals we work with now to do this on a weekly, bi-weekly, or monthly basis. Now, probably easiest for you guys to start with monthly. Weekly is getting pretty granular and very frequent. And a lot of people do kind of start in that monthly frequency, unless they have a client who really needs it on a more frequent basis. But determining that cadence is also going to determine the price that you charge. Talk about that as well. So these are the 2 meetings that you're going to have with your client in order to set things up. So when they ask, what does this actually look like? You can walk them through what that beginning period will look like. And then there's the ongoing meetings. So you'll have scheduled meetings on either a weekly, bi-weekly, or monthly basis where you'll go through these 3 different items right here. Talk about the past, review last week or last month's actuals, what actually happened from a cash in or a cash out perspective. We'll talk about the present. Where are we at today? What's the cash in the bank? What's sitting in AR? What's sitting in AP? How do we think those things are going to come in over time, which lends itself to the last point, future. Where are we going, right? We know where our cash is today. We know historically what happened last week or last month that got us there, but we want to talk about where we're going. So make sure that we have in the forecast those items of planned expenditures or planned outflows. Have a plan in there for the inflows or the revenue that's coming in. So you have a good understanding of where that cash balance is going to be by the next time you have that meeting. Again, the next week, next month, every other week, whatever that happens to be. The third item in here is what it means for you. So this is where you're describing the real benefit of providing this service and going through this process with your client. The first thing is the visibility your client will have into their current and future cash position. So this is understanding where they are, how they got there, and where they're going. And that obviously maps well to the past, present, and future model that we just talked about. So giving them that visibility. A lot of times your business owners or business owners in general are looking at their Bank of America app on their phone or going on their laptop and logging into their bank account, seeing how much cash they have and making a decision now that's going to affect their business for the next 3, 6, 9 months. They haven't necessarily factored in all those other payments that they need to make going forward. And they haven't done any sort of analysis except maybe what they've done in their head or on the back of a napkin, right? So giving them that visibility into where they're at today and where they're going is going to be really important. The second is telling them they're not going to be making decisions in a vacuum anymore. They're going to understand the financial viability of these decisions before they make them. So when they go out and they buy that new truck or they decide they want to sign a lease for a new office space, let's make sure that's actually a good idea and that they actually can fund it through the operations of the business, or if they need to go get some funding elsewhere through a line of credit or something like that, they're able to do that. The last benefit is that you're providing them with the confidence that they're working towards their goals. So remember in that initial assessment period, we're going to talk with our client about what their challenges are and what their needs are, but more importantly, where they want the business to be the next 3, 6, 9, 12 months. And most importantly here, you want to be able to let them know that you are their partner in helping them get there. And by having more frequent conversations with them, particularly around cash flow, it will feel that and you'll give them that confidence that they are working towards it. The last item in here as you're going through this pitch is to talk about the price to them, right? Everyone wants to know how much this stuff costs. We've already talked about what we can do, how we'll do it, and what it means. It's important to go through those 3 things before you ever bring up the price, right? You want to talk about the actual benefit and the impact, the value to them before you talk about the cost. And so it's okay to provide a range to your client, particularly as you're going through those initial setup meetings. It's okay to provide a range based on your initial understandings of the company, and then you can set it after that initial assessment. And that is completely reasonable for you to do. And just as a little bit of a data point, a lot of the partners that we work with, again, the accounting professionals, tax professionals who are doing this, will price it between, I'd say around $75 to $100 a month is usually the low bar, up to $400 or $500 plus, depending on how complex it is and how frequent they're meeting with clients. So the 2 main variables to consider down here on the bottom, this is going to affect where you fall into that particular range, right? How often are we meeting? Weekly, bi-weekly, monthly? That will affect the amount of time that you're spending, but should also drive up the price the more frequent that it is. The second is the complexity. Now, if your clients have particularly complex cash flows, a lot of inflows and outflows, or a lot of variability, right, that would be more complex than recurring monthly inflows and outflows, for example. The higher the complexity, the higher the price you're going to want to put in there, because that's going to take more time from you and also more time with your client on figuring out what the right inputs need to be into the forecast itself to get a good handle on all this stuff. So those are two variables you want to consider when you are setting the price and specifically setting the range when you're going into these conversations as well. So the last piece in here on selling the new service is just how and what to prepare when you're going into that pitch. So what you're going to want to do is when you have technology like Cashflow Tool, you're going to add your client's business to Cashflow Tool before you go into that pitch, because you're going to gain insights immediately from linking up the business, linking up their QuickBooks account that you're going to be able to use in the pitch. Second thing you're going to want to do is recall their reason for being a best fit client. Remember, best fit means they fall into that low-hanging fruit category or the high impact category. And so that's really important because you're going to be able to reference that when you're talking to them about why this is important for them. For example, like, client, last month you asked me about this particular issue, like we were struggling in this particular area. By providing cash flow services to you, going through the past, present, and future cash position and cash flow of your company, we'll be able to give you better visibility to tackle that problem, right? So map that to the reason that you think they're a good fit client to this to begin with. Third point here, perform a quick review of the numbers to match the reason. So I mentioned recalling why they are a best fit client. But when you're looking at the numbers in Cashflow Tool, make sure that you have numbers to back that up as well. And you'll see all that analysis that's done automatically so that you can tell the story through the numbers. The last two things in here is just a little bit more prep time, right? So identify the talking points, go through the slides that I had shown previously, make sure that you're ready, you have your talking points, and practice it before you go in. The agenda of the actual meeting should look something like this. Set the stage by recapping the reason, as we mentioned, tell the story through the numbers that you see in Cashflow Tool, and then walk through the 4 items that we've already discussed. What we can do, how we'll do it, what it means for you or your client, and how much it costs. So now that we know how to sell the offering, let's talk about how to actually execute. And that's going to involve developing some processes in order to actually execute. And you want to use technology like Cashflow Tool in order to do this. The first step to using Cashflow Tools, I'll show you in the tool in a second, is to update your transactions in QuickBooks and sync the data, the QuickBooks data to Cashflow Tool. That's a simple 2-3 click process within Cashflow Tool, but it's important that transactions are updated in QuickBooks and everything's good to go before you start looking at the data in Cashflow Tool. So your process should also include performing a quick review before you go through any of this information with your client. So we can talk about that as well when I dive into the product a little bit. The next step of your process is to make any obvious adjustments or add or remove manual transactions that are included in the forecast before you go into that client meeting. So there's a lot of flexibility within the tool itself, as you'll see, on things that you can do. And you're going to want to make sure that you make anything that looks off or things that you know already about the business, you make those adjustments before you go into that meeting. And then, as we said before, much like you want to identify talking points and kind of get ahead of the things you want to talk about before you want to pitch the service, as you're executing it on an ongoing basis, you want to have those talking points or those things ready, those key items that you want to talk through with them before each meeting as you're going through this. And this is pretty self-explanatory, but as we are discussing the forecast and the KPIs with your client, discuss next steps. So this kind of plays into as well the how we will do it slide as well. So in the ongoing service model, you're going to be talking about the past, the present, the future. And then you're going to discuss this with them and their related KPIs and talk about what the client should do or what they should be paying attention to until your next meeting. And those are going to be the next steps. Now, before we get into the product itself and give you a little demo, we just have one slide in here about step 5, which was starting fresh with new clients, making sure that you're including this in all of your proposals moving forward. So the first 4 steps were really kind of getting you set up and making sure that you are ready to offer this to your current or existing clients. Step 5 is making sure that you are offering this to all of your new clients. And so when you're speaking with a new prospective client, there are some questions you can ask in order to put them into the categories that we talked about at the start of this session. Remember, low-hanging fruit and high impact. So how can we put a prospective client into one of those categories? And the questions that we have up on the screen here will help you identify where to put them. So for example, first question, what financial information do you typically use to make business decisions? I think you'll be shocked at the lack of data or lack of financial information that prospective clients or your existing clients are using when they're making business decisions. What are your financial goals for the business over the next couple of years? This will also play into that and see how that maps into the different categories, different characteristics as we were talking about earlier. So you can use the slides as a resource again, help you have some more engaging conversations with your clients. When you're having these prospective client meetings, you can get a little bit more information from them and help you make the pitch. Just a quick summary of the 5 steps we went through. So we went through identifying your best fit clients to start, how to add it into your current service offerings. We talked through how to pitch it, right? How to sell it to your existing clients. The last was how to execute, went through some steps that you'd want to put into your process when you're providing this on an ongoing basis. And then the last is just how to start fresh with the new clients, how to get them into the categories that we've determined were best fit that we described earlier. Now we're going to show you Cashflow Tool and how you can actually use it to execute on the items that we just talked about. So I'm going to share my screen over here. Is that showing up, Tony?
Yes, we look good.
Awesome. Okay, so what we're looking at here is Cashflow Tool. And I went through and set up this client. I linked it to their QBO file. So that's, my client is ABC Consulting Company. The tool itself also integrates with QuickBooks Desktop. So for those of you who work with QuickBooks Desktop clients, it does integrate with both platforms. And every time you connect the business, we're pulling in data from the income statements, the balance sheets, and we actually pull detailed transactions from the general ledger as well. This is all really important information that we can use to help you have these conversations with your client and talk to them about cash flow. So let's orient you a little bit and show you what you're looking at. So here we have, again, our client, ABC Consulting Company. We have the different features of the product listed along the left side here. We have the cash flow forecast that we'll go through, dashboards, reports, notifications, and documents. We're going to focus really on these first 3. Those are really the main eye-popping features that we're going to talk through with you. We're just going to do a brief overview and then tell you how you can get some more information as well at the end of this. So when we're in the forecast itself, what we're looking at is a chart view of both the historical and the forecasted cash flow of the company. The historical data here, we pull from that transaction level detail that I mentioned, we pull out of QuickBooks, so you can see how the cash balance has trended over time. And that's represented by this blue line. If you look at any of these individual months, you'll see the cash balance at the end of May, for instance, $8,245. That will tie out directly to the balance sheet at the end of that month. These bars represent the cash in and cash out during any given month. So you'll see from a historical or the actuals perspective, what all the transactions were that hit the cash accounts during that particular month. Now that's important because remember, the things we want to talk through with them in a cash flow meeting is the past, the present, and the future. So as you're sitting down with your client, let's say it's in the beginning of September, we can say, client, here were the inflows or the things that came in that increased our cash balance during the month of August or last month since we last spoke. Here are the major items. You can sort this a bunch of different ways by date or amount or by the customer. And then you can go through the same thing on the outflow side to have that conversation. Here were the major outflows that occurred that got us to the point that we're at today. This is helping you tell the story around the numbers, right? We had 11,400. That was an owner draw that the owner took out. We paid, looks like 36, actually three payroll periods in August, each of $1,800. We also paid forward travel $3,300, right? You can talk through what these major things are to help them get into the mindset of talking about cash in, talking about cash out, and helping them get to where we're at today, which is 5,225. That's where we're sitting as of the date that we just linked, which was yesterday or 2 days ago, September 24th. You can look at the breakdown of the cash, talk to them about how it's allocated across their different accounts. This is talking about the present, right? Where are we at today? This is our cash balance. You can also talk about where their AR and their AP is. These are obviously invoices and bills that they have in QuickBooks. This is not required to use cash flow tool, to use billing functions and things like that in QuickBooks, but it is helpful information. If it's there, we're going to show it. And then you can start getting into the forecast itself. Let's say I just want to focus on the next couple months. So I'll filter the chart up here to just focus on October and November. And we can talk about, from an inflow perspective, what are the forecasted inflow items? Now you'll notice this includes invoices and then forecasted cash in. Invoices are things that we pulled right out of QuickBooks. What's sitting in AR, we'll put that into the forecast for you. So you'll see every invoice here that's in QuickBooks. You'll see the customer, the amount, and then the date here is a forecasted payment date based on how the customer's paid historically. So the cash flow tool will do that analysis to say, you know, Norton Creative Services has paid us 40 days late on average. We're going to forecast it based on that, not when it's due, because they don't pay when it's due. And you can come in here and you can make some adjustments if you want. Let's say I want to push this out to November. I can do that very easily. You'll see the chart adjusts, and I can make adjustments to the items in here. You'll also see these forecasted cash in items. You'll see if I scroll over, these are automatically forecasted based on historical payments that we saw for the customer. So cash flow tool's doing a lot of work here in order to populate this forecast for you, and then you can come in and make adjustments to it. Now we'll add these automatic forecasted items on the inflow and the outflow side. Really good example of, say, an outflow item that you'd want to be auto forecasted is payroll, right? That's happening typically around the same amount, and it's happening in a defined time frame, right? It's usually every other week or once a month or whatever that happens to be. In this case, we looked at we being cash flow tool, looked at the historical payments that we made in payroll, and then it automatically forecasted that same pattern to repeat. So you'll see that happen throughout the forecast period. And then if you want to make any adjustments to that, like let's say we know that payroll is actually increasing, you can adjust it automatically in here, and you'll see how that will affect the forecast moving forward. You can also set rules, you can add in manual items, you can remove items, you can do a ton of different things in here in order to make sure that that forecast period reflects what your customer or your client expects is going to happen. Remember, a plan is better than no plan. So putting something in here is really, really important. And then you can talk to them about where their cash balance is going to be from a forecasted perspective over the next few months, help them add in those decisions that they need to make sure that they have funds for it specifically. Real quick example of that is just, let's say we want to buy a piece of equipment. So we're going to add a one-time cash outflow of new equipment. That's going to be $10,000 in October. Let's see what that does to our cash balance. So we'll add that in. You can see that manual item was added in here. And you can see the cash balance reduced by $10,000. And we're now forecasting it to be $30,000 by the end of that month. If we were not buying that equipment, you'd see that the cash balance would obviously be higher. So there's a lot of different scenarios and things like that that you can run in here as well as you're going through with your client, talking them through the past, where they're at today, and then talking through the forecast itself. The other component of this that I want to talk about is the dashboards. And so in the dashboards, we use the income statements and balance sheets that are already in QuickBooks to produce metrics, KPIs, and different things that you can go through with your client on an ongoing basis. We have a library of around 35 or so different cards in here that all represent a different metric, different trend, different KPI that you can go through with your client. You can track this automatically, and then you can have a conversation about it. You can also create a dashboard completely from scratch using the cards and just add the ones that are most relevant to your client. So in this case, I just picked out 4 cards that I wanted to go through with them: working capital, current ratio, AR, and AP days. That way, when I'm going through our cash flow meetings as well, we can talk about the metrics that are particularly important to the company. So that's another tool that you can use during these meetings, and that really aligns to obviously doing that KPI tracking over time so that you can get ahead of some issues. In this case, AR days, as we were talking about before, has shot up. So now it's taking us on average 70 days to collect from customers instead of the 20s or even below 20 that it did a few months prior. That's something we want to get ahead of, obviously. Last feature in here I want to talk about are reports. So as all the data that we're pulling into the forecast and the dashboards, you can export into report formats that you can provide your client as a deliverable. So I know accounting professionals are really used to delivering something to their client, whether that's the tax return, the income statement, the balance sheet. You can do the same thing here and produce for example, weekly or monthly cash flow forecast report that's in a downloadable Excel spreadsheet. I'll show you here. Or you can also create a PDF of the information that's in the chart and the dashboard. So I'll generate that. This is the Excel forecast also that I just exported. This is on a weekly basis, but you can see our starting cash for each week, the inflows broken down between what's in AR, all the other inflows, what's in AP, all the other outflows. And this is completely formula driven. It's formatted for you. It's beautiful. It's client ready. So you have that deliverable that's generated from all the data that's in the tool already just by clicking once on the report in the report tool that I just showed you. Let me get back to here. So that PDF report generated as well here. You can see a preview of it. And you'll have a nice visual of the chart that we were just looking at, in addition to just that one dashboard that I picked off as well that I wanted to go through with them. So I can give them a PDF, I can download this and give that to them as well. The last thing before we jump out of the tool is just around inviting users. So a lot of you guys have staff that you want to work with in the tool itself. You can invite your staff members to this by just putting in their name and email, and you can actually give them different permissions. That's edit or view access to different components of the tool. You do the same thing for your clients. You might want to just give them view access of the forecast, for example, so that you control and make the edits and things like that, but they can still dive in and take a look at it. Okay, so we've taken you through the tool itself, kind of walked through how you can go through a past, present, and future conversation with your client around cash flow, how you can use the dashboards to drive conversations, and how you can generate reports based on all of that. Now, one thing that I want to highlight that I mentioned briefly in the Facebook Live yesterday as well is what it means to be a cash flow tool partner. So in addition to the technology that we just went through, there are a lot of other benefits to working with us and helping your clients in this area. So you see the technology on the top left. When you become a partner, you're going to be well-trained and well-versed in how to use this with your clients on an ongoing basis. The rest of the benefits of the program include resources, training, ongoing support, and product input as well. So from a training aspect, you'll have an account manager who will work with you one-on-one to onboard you into the program and into the products so you have a good understanding as to how to actually use it with your clients. We will look at the data with you. We'll help you prepare for those initial conversations. And that's going to be one-on-one. It's going to be really high touch and really helpful to you. We also do monthly partner webinars. We actually have one today where we talk to all of the partners or all of the accounting professionals we work with, and we train everyone on new features, talk through best practices, and also do an open Q&A with everyone who's there. All of the partners get replays of all these things through our partner resources portal. We have a dedicated site that is just meant for our partners, where you can access replays to these different trainings. You can also get access to discounted versions of our certification program and other courses that'll help you get up to speed on how to do these or provide these types of services. Resources, we have an abundance of resources in terms of different guides, library of how-to videos, even email templates that you can send to your clients to get these things up and running. And then we have an ongoing support team as well to help you either whether you're in product, you have a quick question, you can email us, we set up Zoom meetings, whatever it is that you need to be supported in order to do this for your clients. And lastly, our partners provide a tremendous amount of impact or input, I should say, in what the product roadmap looks like. So being a partner means you can submit feature requests to us, and we'll also talk to you about what's coming, and you'll get exclusive first look access of what those things are. That's what being a cash flow tool partner means. That's really the entirety of the program. It goes well beyond the technology that I showed you in the tool itself. It's helping you implement everything that we talked about today. So Tony, before we wrap up here, we do have a special specifically for the Latino Tax Pro members, and that is 10% off any of our plans for the first 12 months. And that's in any of the plans. The plans start at, using this discount, $90 a month. You can add up to 3 clients into the tool. You get all the training and everything that I just described as well. So your members can go to cashflowtool.com/refers/Latino Tax Pro, and there's a special landing page, Tony, that you can send folks to. They'll be able to access the code and get all the information that they need. They can also book a demo. So if you want a more in-depth walkthrough of the tool itself, there's a link on there for them to book that, and you'll get access to, you'll just be able to pick a day or time. You'll be able to sit down with our team, talk one-on-one about it, and see how it can fit into your business.
Nice. I love it. Thanks for all the information. And everyone, you see Justin's contact information here. Reach out to him with any questions. It was nice seeing the actual user interface and the design of the cash flow tool and how you're able to kind of visually see where you stand. Cash is the fuel of your business. So if you don't know how much fuel you have in your tank, it's hard to, make that purchase or even continue, or even, are you going to make payroll at the end of the month for your team? I mean, it's a lot to do with it. So it's great to have these tools that exist out there. But thank you, Justin, for your time, and everyone take advantage of that 10% off. That sounds awesome. At least check it out, right? That's something like we said yesterday, with or without cash flow tool, with or without Latino Tax Pro, you as an accountant, a tax pro, should be aware of the needs of our clients and become an advisor to them. So
I will say, Tony, as well, absolutely take advantage of the expertise that our team has. Like, we will go to that site, book a demo with us. We will talk to you one-on-one about what's going on with your business, what you're trying to do, and if Cashflow Tool is a fit. So we've been talking to accounting professionals for years about this stuff, and we can help you determine if this is where you should be going as well, and how to actually do it. So please contact us. That's what we're here for. We're here to support your members and the rest of the industry on helping to do this.
Perfect. I love it. Well, thanks so much, Justin, and I'll be sure to see you around. And thanks everyone for being here.
Thanks, Tony.
Have a good one. Talk to you soon.
Bye.